Hello and welcome to Let's Talk. UBS is taking over Credit Suisse. It's one of the biggest deals in the banking world since the 2008 financial crisis. The rescue of Switzerland's second largest bank now raises big questions about the future of banking. What could a mega bank look like in Switzerland? And how can Switzerland recover from the crisis and ultimately ensure stability in its own financial market? That's the focus of today's discussion. So with that, let's talk.
What's next after the Credit Suisse debacle?
We are coming to you today from the studio of the Parliament building right here in Bern. For our discussion today, I would first like to welcome financial journalist Myret Zaki, Matthew Allen, business and fintech reporter at swissinfo.ch, and author Marc Chesney, professor of mathematical finance at the University of Zurich. Why don't we start from the very beginning? Switzerland's largest bank, UBS, taking over its rival, Credit Suisse, in a deal worth 3 billion Swiss francs. How did we arrive at this point?
Well, I think the warning signs have been there for some time. And if you just look at the timeline of the last 3 years, you see a lot of problems piling up on top of each other, with the former CEO, Tidjane Thiam, having to leave with a spying scandal. Very next year, billions being lost on Greensill and Archegos investments. Then you had a number of damaging court cases involving Mozambique corruption, with the Swiss court finding Credit Suisse guilty of money laundering. Then the Swiss leaks, client data being spread to the media. And all this led in October to Credit Suisse announcing a huge restructuring and a capital injection of 4 billion. And I guess they hoped that at least this money would paper over the cracks, if anything. But on March 19th, we found out that couldn't be the case.
So a series of troubles and scandals really following the 167-year-old bank. Now, the historic deal was actually put together in just a matter of days, over a weekend. What was going through your mind as you watched all these events unfold?
Behind the Credit Suisse debacle, we are confronted with the failure of the political world in Switzerland, who in its majority decided to close its eyes during 15 years and finally cobbled together a solution in about 2 days. We knew already in 2008 that big banks were complex, were opaque, also had too many derivative products not on the balance sheet, off balance sheet. It was dangerous. We knew that, and nothing really serious was done.
You've been an outspoken critic of the Swiss financial system. Were you surprised at what you saw?
I analyzed the situation. I analyzed the situation over the last 15 years. And what is disappointing is the fact, again, that politicians close their eyes. They pretend doing something. But at the end of the day, again and again, nothing really serious is done. So what comes next now? We have to be cautious with this monster bank, which is UBS.
Yeah, that's the million-dollar question. Now, Myret, what was going through your mind?
I remember that my last book about the shadow banking system, it's a book that was published in 2016. My message was that interest rates could never rise again. It's a radical message, and I was told what you said is wrong. Interest rates are at 5 now. But when they reach 5%, what happened is that the equity capital of banks like Credit Suisse and Silicon Valley Bank became completely unstable, because when interest rates rise, the whole financial system becomes more risky. I don't think many people in the public understand this. If central banks keep interest rates at 0 for 15 years and then decide to raise them, what happens is there is a mountain of speculative credit and risks. Even the balance sheet of Credit Suisse wasn't solid enough to take this interest rate rise. Plus, there was the exposure of Credit Suisse to non-banking sector, which we call the shadow banking sector, which few people know about, because people ignore the complexity of the financial world, what it has become today. What it has become is that we have 67 trillion of speculative credit that directly poses a systemic risk to the whole planet, and we call that the shadow banking system, and it's concentrated in the United States. So we have a financial market that had become extremely risky, because of a very long, prolonged period of zero rates that have been orchestrated by central banks. They are responsible for this heightening of the risks on the market. And big banks like Credit Suisse are just too vulnerable, too exposed to this. And we never, no one ever listened when the alarm was sounded that equity capital wasn't enough, that risk-taking was too much. If Credit Suisse hadn't been listed, and it had the same amount of scandals for the last years, it wouldn't have been as much as at risk. But what happens now is that on the financial markets, you can have players like hedge funds that could just put you down, that would kill you in a few hours by short selling your shares. So in a few days, hedge funds generate 7 billion in gains just short selling the shares of Credit Suisse and siphoning all of its capital, all of its market cap, actually. So vulnerability to what the financial system has become is what everyone ignores today because we haven't even seen it growing. There are reports on the shadow banking, on non-finance banking, on speculation, but no one reads them. It has become too technical. So the complexity of finance has become such a barrier for the public that everyone was caught by surprise. But I had been following this, and actually I can say I was surprised. What I was surprised about is the quickness of now the quickness of the rate at which you can now kill a bank on the markets by just selling it down and aggressively, raiding against it financially. And these are the players now who make the market. They decide who survives and who doesn't. And Credit Suisse happened to be one vulnerable spot of the financial system.
It's an incredibly complex situation that you've outlined, and that deserves also a complex rescue deal that they've come to. Now, the Swiss government is supporting this takeover, promising additional liquidity by the Swiss National Bank, and they want to avoid an international financial crisis. What do you think of this solution?
I'm not convinced, because again, we are confronted with a monster bank, UBS, with incentives to engage in risky activities at the expense of the taxpayer. And it will be worse now than before. So it's not a good solution.
Matt?
Yeah, I think what I was struck by was once again the fragility of the whole system. We saw the warning signs with Credit Suisse even in a few days leading up to its takeover. You saw the Swiss National Bank having to inject or give it 50 billion worth of liquidity. And again, is that going to paper over the cracks? Well, actually, no, it didn't. And again, I could see Credit Suisse, even though it's 167 years old, I could have seen it disappearing. But again, I couldn't see it disappearing over the course of a weekend. It seems to me, I mean, I covered as a journalist, the 2008 crisis as well. And it seems to me it's become even worse, and it's requiring even more extreme measures, emergency measures. The government had to assume emergency powers to force this through, sort of shoulder aside the shareholders and the bondholders. It seems to be becoming more fragile than actually safer.
This all raises an important question. Have we learned any lesson from the 2008 financial crisis?
I don't think we have learned, because we didn't want to give up on, a new euphoric phase on the stock market. So we just regulated the banks, and we left the non-banks completely unregulated, so that the whole speculation was there. And then we left the rates at zero, as I told you, which really nurtures the speculation very, very highly. So that I agree with Matt, the amount of risk in the system has actually increased. So why do you think that the amount the Confederation and the Swiss National Bank have given is 259 billion for a bank that is 5 times smaller than UBS back then, in 2008, when it was only helped at the amount of 50 billion. So we help now Credit Suisse with 5 times more amounts of liquidity than back then, when the bank is actually smaller. That is because the whole financial system, the total risk has increased. And this fragility comes from there. And we just let our eyes closed in front of this phenomenon. Why? Because we want to have stimulating, challenging, nice, competitive, attractive stock markets. The US wants to keep their stock market attractive for, private equity startups, all this tech boom, this incredible tech boom we've seen. It was all credit credit that we borrowed in order to invest at a higher return. So it's all arbitrage strategies, it's all speculative strategies, including in this whole tech boom that we have. Many people have profited from that, have just pocketed enormous amount of bonuses and money. But when the time comes to pay for the bill about all this risk taking, it's just us paying for it.
Exactly, and I think, Marc, you want to jump in here as well.
Yes, briefly, I think what big banks have learned about the situation is that they can engage in risky activities at the expense of the taxpayer, and that most, or at least a majority of politicians, will support this decision to engage in risky activities. And that's a danger for us.
Matt, I'm curious to know what you think about where this leaves the too big to fail law in Switzerland.
Well, it's quite clear the too big to fail law failed spectacularly with a big F. I mean, there was two sort of stages to it, two parts to it. One is sort of trying to put a handbrake on risk by forcing banks to take the insurance of putting aside enough money to cover potential defaults, and the other part was if that should fail, should a bank have to go down, then let's do it in a way that isn't going to take down whole economies, cause shockwaves, and isn't going to involve cabinet ministers, central bankers, regulators and banking executives sitting in the same room for a weekend trying to thrash through some deal, if not breaking laws, then at least bending the laws of property rights and so on. I think Switzerland, as other countries did, had a chance after 2008 to put in a proper resolution plan. And I think Parliament fudged it a bit, and they all thought it would go away. So, yeah, I mean, it failed, and it needs another complete rethink.
So it really didn't have to come down to emergency measures if preparation had been there beforehand.
Yeah, exactly. I mean, that's the whole point of too big to fail. It's supposed to avoid precisely this situation. And the trouble is, if a bank does go down that's very big, then it takes down not just the domestic economy, it also has an impact through all the counterparties all through the world, all the trades, the counterparties and all the other trades as well. So there does need to be, I think, a system whereby parts of banks can be put away or put to sleep, and other parts kept alive. But it was a big fail, I think. And I wouldn't be surprised if in other countries you'd see exactly the same thing, that the resolution plans just simply wouldn't work.
I think it's a good time now to bring in a reader from the audience, and they have a question for us. His name is Jean-Pierre Mitas. He's a financial analyst coming to us from Boston. After hearing what the experts here have told us today, what is the question that remains unanswered for you?
Well, thank you very much for having me, and I appreciate this conversation. And we need to have a thorough conversation and discussion on all this to get to a better solution. My question is that I'm assuming that in mid-March, the players suddenly and simply had far too little time to follow the prepared emergency plan for Credit Suisse. What do you think of a scenario in which UBS temporarily bridges the situation, and then over time we actually will see many elements of this resolution plan get executed?
So what you're saying is it could be practical that UBS just temporarily buys Credit Suisse while other solutions are being examined. But actually the cost for UBS to integrate Credit Suisse is so huge that it would be very unlikely for them to disentangle all of that in a few years. They're gone in this strategy for the long term. There are going to be people that will be laid off, like 20,000 people, and in very, very big integration costs and costs for the Confederation that aren't going to be paid back to the Confederation by UBS. So what you're saying would have been more adequate if it was the Confederation that would have taken a share in Credit Suisse, would have, made it, reform it a bit, spun off some divisions and reform maybe the compensation structure, the governance structure, and sold every bad activities, the bad bank, get rid of this. And then later on, or either sell it to another bank or leave it to survive by itself. That would have been a plausible solution, I guess, more than the scenario you just described, I guess. Mm.
Yeah, I think UBS had its arm twisted enough to take over Credit Suisse. I mean, you could argue it got a pretty good deal at $3 billion, but I don't think they were particularly happy with politicians more or less telling them to take over this bank. It's noteworthy that UBS has never talked about selling off parts of Credit Suisse, the old Credit Suisse. It's talked about how the integration of Credit Suisse is going to make them bigger and better, and size is going to be a competitive advantage. It's talked about how taking over parts of Credit Suisse, say in the US, where Credit Suisse is strong, and in Latin America, is going to make them more powerful. Yeah, the thought of UBS doing the politicians a favour and holding the fort for a bit until they can work things out, no, I don't think that's credible. I think UBS is too much of a business to do them such a good turn.
Now, the combined assets we're talking about is looking at around $5 trillion. Marc, when you hear this figure, do you think UBS is just too big?
Yes, UBS is too big. Again, a balance sheet which corresponds to twice the GDP, the Swiss GDP. If you consider derivatives of balance sheet activities, it corresponds to 40 times the GDP of Switzerland. It's too big. We need smaller banks who could go bankrupt as any other companies if they take bad investment decisions, and that's it.
Okay, I'd just like to say a big thank you to Jean-Pierre Mitaz for joining us there. Hopefully, if you have other questions, we can leave it to the end of the segment. But for now, thank you so much for coming to us from Boston. Now, coming back to you, Marc, you've talked about this, about UBS being too big. How then, to the rest of the panelists, how then can we ensure that there is fair competition and prevent this market dominance?
Of course, we should now be able to have a leverage on UBS to incite it to spin off some activities. Because imagining UBS survive in this form in the future, even though it has circumvented the Competition Commission, the COMCO, and it has a dominant market share in many activities in Switzerland and elsewhere, it's just not good for the Swiss market in general and the banking sector. The banking sector in Switzerland is a liberal country. It needs a competitive sector where all players can be playing on equal level and not being helped or guaranteed by the state or anything. This is not the liberal view that we have built this country on. So if we could separate the depositors' business from the investment banking business, that would actually protect the depositors from any future situation where they would be hostage, and us as taxpayers would be hostage for the hostages of the investment bank, you know. Because right now, we just haven't learned from the past. We still are exposed to a future problem where we would need to save the whole entity because there are depositors, because the investment banking has taken too many risks, and they're just not unfolding. They're just not reducing, downsizing, as you said, the investment banking activities.
I see you nodding your head there, Matt.
Yeah, sure. I mean, this is a big point that needs to be raised. And we had this after in the US after the stock market crash in the 1930s. We had the Glass-Steagall Act, which forbade domestic retail banks from engaging in investment banking activities. And then that kind of, in the 90s, that went away. Now the combined UBS and Credit Suisse is not going to be a huge bank on a global scale. It's going to be something like 20th in the list. So as on a global stage, you could say, well, it's not that big, but of course people then say within Switzerland,
as a small country,
twice the GDP of this country, people would argue, well, we've got a huge pharma companies, we've got a huge companies like Nestle. Switzerland is a small economy, but it has built its reputation on punching above its weight and having international-sized companies. But I think what this has shown with Credit Suisse, what happens is if it can't fail, then you have to protect the domestic side of the banking system, and then you have to have this separation. Otherwise, it might well drag down the country's economy.
It seems there's a lot that we can learn from history, and we also spoke to economic historian Tobias Straumann. He shared his thoughts on what it takes to really contain a banking crisis. Let's take a listen.
As a historian, I've seen everything in history before, so it's rather it's a new combination of known elements, because that's very normal that a banking crisis is, in a nutshell, is always a liquidity crisis. And we've seen in the last 200 years, we've seen dozens and dozens of similar cases. Maybe what's special about Credit Suisse is the speed of the liquidity crisis, the speed of the bank run. My view is either we completely change the business model, or we accept that we're going to have another financial crisis next 10 to 20 years, and then we just need a good plan to nationalize UBS and then to probably to sell it. But it's dangerous to tell the voters and the clients that legislation and regulation makes UBS safe forever. That's just not true. And I think after the case of Credit Suisse, I think everybody has to be honest now and admit that UBS will remain a risk for us, for our finances and for the real economy. You should be totally prepared, because it's not so difficult to develop a plan in advance, because we've had so many banking crises with so much experience, and Sweden showed in the 1990s how you nationalize a bank correctly, so that taxpayers don't have to pay for that, so that they actually even get a reward back.
Marc, what are your thoughts after hearing what Tobias Straumann has outlined?
I think that the dimension is missing here, precisely the too big to fail dimension. What is new now, I mean, over the last 40 years, is that if you take the example of Credit Suisse, Mr. Brady Dugan was a CEO after the crisis, the 2008 crisis, received around 150 million Swiss francs, and the stock price decreased of around 70%. Mr. Thiam, his follower, received around 64 million Swiss francs, and the stock price decreased of 40%. Mr. Gottstein in 2021 received 3.8 million Swiss francs despite all these scandals. Mr. Ossroner, you know him, he received around 40 million Swiss francs, and the stock price decrease of 71%. So that is new in the history. They leave the bank with huge bonuses and they disappear. It was not the case 100 to 200 years ago. So we have to take that into consideration. Again and again, they have incentives to engage in risky activities. And there is no risk. They talk a lot about risk, but there is no risk for them.
So what do you think should be changing? These pay packets, as long as they're gone, you think the risk will also be gone?
Yes, so simply, I mean, I think with 1 million Swiss francs per year, it's more than enough for a CEO. Otherwise, you attract people who want to play poker with tax money, basically. So that's dangerous. Okay, and they should be responsible. They claim they are liberal. The basic principle of liberalism is very clear. If you engage in risky activities, you assume the risks. Very simple. They engage, I mean the CEOs, they engage in risky activities, and we as taxpayers we assume the risk. It's not liberalism.
Right, so you're describing our financial system as quite casino-like.
Yes.
Is that correct?
Yes, I confirm.
So if we look ahead to the future, I wonder what all of the incidents, what all of the events we've seen, what kind of impact that will have on the Swiss financial sector. For the merger, Myret, you want to jump in?
The impact that it will have is on you, on your finances. I don't think that the Swiss public watching us right now realizes how much we have paid as taxpayers. So when you provide 259 in liquidity and other different forms of help, actually what happens to the Swiss franc, to your savings, to the purchasing power of your salary or your future retirement plan, is actually that it gets devalued. Many people watching us believe that the Swiss franc actually gained in value over the years because they only check the interest rate with the exchange rate with the euro, but this is wrong. Actually, the Swiss franc has devalued over the years, and you need 4 times more Swiss francs today to buy the same amount of gold as you did 20 years ago. So your Swiss franc is devaluing. But as you didn't feel the bite of having to give a big amount of money to save, to rescue Credit Suisse, you don't have the feeling right now that you have paid, but actually you have paid a lot in terms of your future purchasing power, of that of your children, and of that the whole of the Swiss economy. There is a big loss here. And this needs to be very, very well clarified, because people they believe that the Swiss National Bank can create liquidity and this doesn't cost anything. But it's actually a tax on everyone's account, savings account. And this needs to be very well understood.
Matt, is Switzerland's financial sector still credible in the eyes of the international financial community, or is it really going to take a bit of time for them to recover?
Well, I think it probably still is credible, but not to the same degree. And when I speak to bankers, this is what they're worried about. They're worried that clients aren't going to come to them anymore. Remember, Switzerland is the largest offshore hub for international wealth. And it remains to be seen how many people are going to be from abroad, are going to be taking their money outside of Switzerland and outside of Swiss banks. So there could be a knock-on effect with the whole sort of wealth management scene here. I know bankers are particularly worried about this. And also we had this situation with the Swiss financial regulator writing off about 16 billion worth of bonds. And there are legal suits flying around. I heard, obviously, the US, there's been class action lawsuits. I heard today that some are being formed in Singapore as well. And so there may be challenges there. Even the Swiss Attorney General, the federal prosecutor, is looking into the legality of this. And this is what bothers me, is that the emergency powers that were assumed by the government to force this through are basically thrown the shareholders aside and said, you don't get a say on this, and have tested the boundaries or the laws of the bonds that were, these 81 bonds that were issued. And so there may be further ructions to come through legal actions which will damage the reputation even more.
Just to wrap up, because there's been a lot that we've digested today, how can we avoid a scenario like this again? How would you like to see the Swiss financial centre develop in the future?
Again, we should work with small banks, much smaller. We should not be taken as hostages, as Myret Zaki said. That's dangerous. Check the compensation schemes. They are too high. That's dangerous. And we know we have to split banks. Again, another form of the Glass-Steagall Act should be reactivated, etc., etc. We know what we have to do, but it's not done.
So compensation schemes and smaller banks. What's your proposal?
We need to be paid an insurance premium for the permanent guarantee that you and I offer to the big banks, because we are the rescuers, the ultimate rescuers, and we are permanently there to guarantee for them, as said Marc, the capacity for them to take risks, unreasonable risks all the time. They wouldn't do that if they would left to fail, actually. It would be a bite, and a definitive bite. They would never do it again. But we never let them fail. So we have to rescue them all the time. And this guarantee, the implicit guarantee that you and I are offering, we're not being paid for it. You pay an insurance premium for your car, and if you make an accident, your insurance premium increases. But we are not being paid for the rescues that we are now multiplying for all the crises, all the regular crises of the financial system. And we should claim this insurance premium. In other words, the banking sector, the big banks, should pay to the public a premium, a very expensive premium for this guarantee of rescue that we offer on a chronic basis. So you see what I mean? It's a very logical economic principle that is not being applied when it comes to taxpayer money, because taxpayer money is supposed to be freely given. There's no democratic consulting about it, nothing at all. We're not even being asked, but we're being ripped of this money. Mm-hmm.
Matt, what can you offer as some final food for thought?
I think we just have to ask ourselves what banking and finance is for. It's supposed to be there for a force for good. It's supposed to be there so that businesses can function. It's supposed to be there so that people can pay things. That's a very sort of basic level, but it should be for good. And people talk about casino banking. I don't think it's the banking per se. I don't think investment banking is purely casino. It's not speculation. It does have proper functions for good in the world. It's the casino part are the people. It's the people who operate the banks, and I think they should be held accountable. I agree with Marc. I don't think they should sort of walk off, maybe losing their job and then get another cushy job later on. We've seen now how finance and politics is drawing ever closer together. We just had our reader suggest that UBS is holding the fort for the politicians. Not really. So I think if banking and politics is coming closer together, then there should be this question asked, why don't we make people responsible or held accountable for the casino type of things they do in banks?
Well, thank you very much to all of our guests today for this insightful discussion. We answered a lot of questions, but of course, as we know, there are still many questions that remain unanswered, and we'll have to wait and see how everything develops. Thank you also very much to our guests for tuning in and joining our discussion. That brings us to the end of today's Let's Talk episode, and this one can be found also in French and German. So make sure to tune in and catch that. And of course, we look forward to seeing you for our very next episode of Let's Talk. Goodbye.